On today's Positively Sloped, Neil and I are back in the studio to discuss the most recent updates out of Iran, how that's affecting the inflation print from Friday, as well as what to expect from the upcoming earnings season. Before we wrap up by giving Neil his flowers for the Michigan March Madness win and talking about Rory's Masters performance. All right, let's talk shop. Today is Tuesday, April 14th. Neil, welcome back to the studio. It feels a little bit like Groundhog Day, where we're going to cover some of the same topics we've been talking about for the last month.
I mean, the headlines kind of have the same topics going, so makes sense.
That's true. That's true. We got a big inflation report on Friday, bigger inflation report over the weekend with Rory McIlroy winning the Masters. Oil is back in the news. The geopolitical conflict in Iran has got some new news to cover, so we're going to get through it all today.
All right.
But let's start by reviewing the fades or trades that you and I did a few weeks ago.
All right.
We've got some resolution on these, some that aren't. But so the first fade or trade we did on our last episode was that the March jobs report would surprise to the downside. You traded that. I faded that. There's a theme coming up.
The same thing as trading. Like
yeah.
I went short.
Yeah.
So I made money. Is that what we're talking about?
No, you didn't.
I didn't make money. Okay.
You said it would be surprised to the downside.
Okay.
Where there's a theme on this show where I'm kind of hitting on the fades or trades really well.
Okay.
But, I mean, the numbers that we had a huge gain in March, upwards of 175,000 jobs. Yeah. A lot of that coming from the healthcare sector. What did you see in that report?
So obviously it was a positive number, looked big, relatively speaking. I think if you look at the kind of the trend of the jobs number, it still wasn't really out of place. So it was a positive number that was good. We got a lot of it back from the healthcare strike that happened earlier in the year. To me, it doesn't get me super giddy about the labor market yet. But yeah, I lost the bet. So,
it's an interesting number coming off of the February number, which you've got kind of this double-sided edge of February was brought down by the labor strike, and then March was brought up by the labor strike. So you kind of need to balance those two out.
Yeah. So I mean, I think when we do that, you still see a net positive for March, even if you kind of take March and February together.
Yeah.
But again, I think if you look at it in overall trend, you look back over the last couple of years, we still see kind of a cooling off in the labor market. So I think the upcoming numbers as the year plays out will be ones to watch.
Yeah. The second fader trade that we had was that the Fed trader fade with the Fed cut rates in the next two meetings. I think we both faded that. March we had nothing. April next week is tapped up to be a 2% hike. If anything, I think there's nothing
happening next week. So I'm taking an early win on that, even if we have to wait till next week.
Yep, I would agree with you there. Third one, and if it's loud down there, we've got a ton of action down in the open cry pit today. Which is interesting. Market was up, 50, 60 basis points this morning. It's only up 70 now. I don't know what all the volatility is out there. But,
I mean, they're probably sports are kind of quiet right now. I don't know. Maybe they're betting on somebody's lunch.
That's true.
Pits are always crazy and active.
Yeah. And the third one we had was the Tigers win projection for the year, over 85 and a half. They're 7-9 to open the season. Trust me, that's a great record. That's what the Cubs are. So it must be in a good position.
I mean, look, these games it's too early in the season. Games don't really mean it. Can't even start really counting games until June or July, and they don't really matter till September. So that's early. My confidence has gone down a little bit, but
it'll be all right.
I'm still okay.
It'll be all right. And then the last one that we discussed that we didn't have you on last week, so I got to give you your flowers for. But national championship for the Michigan Wolverines shocked the world, boys. One seed, best team all year, and they shocked the world. Mean,
it was that was awesome.
It was awesome.
It wasn't quite the final that we were hoping for. In fact,
not a ton of drama for them.
I mean, we'll talk about it more when we talk about some sports stuff. But I'm very happy with the win, of course, as a Michigan fan. So
all right, let's dive into the current news. So the news out of Iran the last couple of days. Yesterday, the U.S. initiated or imposed to initiate a blockade of the Strait of Hormuz. And the ports in Iran, essentially trying to, stop any Iranian exports. We've got reports already this morning that though that blockade is not really in effect, there have been boats coming in and out. China's getting in. I think
if you look at that, yes. I mean, I think if you look at it, if you just did a quick snapshot of the headlines, there's still traffic moving in. I mean, I think if you break it down further, I feel like a majority of the ships are probably entering the Persian Gulf, so they're probably not as concerned about those. I think what I saw from my headline read this morning, one Iranian sanctioned ship made it out. But little clear. So whether it's working or not, we'll see.
Yeah, I mean, I saw a Chinese ship got in on its second try, so he originally rejected it. Okay. Somehow got in on the second time. But that brings me to China. And I felt like this, and we were discussing this briefly yesterday, but I felt like this was the initiation of China into these negotiations, where finally, China's been pretty much unscathed by what's been going on so far. We saw Chinese imports were relatively unharmed in March. So this, I thought, was the first thing to bring them to the table, because now we're actually threatening them getting their oil exports.
So you think that the blockade is what's bringing China into the talks?
I think the blockade and threatening. I mean, we there's about 35% of Chinese oil that comes through the Strait of Hormuz from various countries there.
Right.
So
I mean,
if you're blocking it and they can't get a third of their oil, I think that all of a sudden perks up Xi's ears a little bit.
Yeah, but they weren't getting a third of their oil. Yes, they were getting some of their Iranian ships through. I mean, obviously China's a big, huge purchaser of Iranian oil. So that relationship held, and they were still getting flow there, but still only 10% of China's oil needs, and a majority was still already blocked. So I think back, if you think about the blockade, if you take a step, why are we even in Iran? Why are we at war with Iran right now?
I mean, I think it depends on if you take Trump's motive at face value, that they were pursuing a nuclear weapon and they were close, or if you look for some ulterior motives that were trying to be strategic, and this is an extension of tariff talks.
So to me, the whole thing looks very disorganized and reactionary, right? I think if you think about, we've heard a lot of reasons of why we're at war. Certainly the nuclear capability, which technically we obliterated last June. And
Epic fury.
I looked up what obliterated means. Yeah. So I don't feel like it should be a threat right now, or should not have been a threat in February, but apparently that's been an excuse. We also talked about a regime change, which all we've managed to do there is kind of upgrade the regime to a newer version, younger version. Same ideology.
Same family.
Same family, exactly. Then it was, we're going to try to make it easier for the Iranian people to topple their government and move more towards a democracy. But I feel like all we've done is really rallied the country around anti-Western sentiment. And, especially when you have a president come out and talk about annihilating a civilization, which, by the way, I don't think is really a Jesus move. So it seems
that was a doctor. That was him as a doctor.
Okay. I mean, I had my fake news goggles on. I'll have to go back and look at the picture and take my goggles off and see. But the whole thing obviously seems very reactionary. So my theory is that, and when I say reactionary, the blockade seems to be just another step of that reaction, which I'll talk about in a second. But my theory is, and let's see if you buy into this. So Netanyahu calls up Trump and says, I'm going to go on an excursion in the Middle East, and I want you to come along. Trump's like, excursions sound fun. Can use a distraction from the Epstein files. I'm in. You get the guys from the Pentagon in the room, start war planning. Somebody brings a discombobulator in for show and tell, and it accidentally goes off. And now we have a completely discombobulated plan on how we're going to be tackling this in the Middle East. And while I actually think the blockade is probably one of the more useful steps, we're going to see, because it'll tell us now whether or not we hear Hegseth talking all the time about how we've depleted Iran of all their resources. And so this will be a challenge. Like if it comes down to, if it's just heavy-handed talk in both directions, that's fine. We have the ships there. But if Iran starts firing stuff, we're going to have to reevaluate. So I think we got a couple weeks here where we're going to know if this is, if there truly has been some depleting of the resources in Iran, in which case hopefully this thing would get onto a pathway for peace.
We agree on the blockade being, I mean, I would say it's the most real step that we've taken. There was the threat of the deadline last week that, if you buy into Taco Tuesday, you knew it was going to happen. Right. It would have been in my opinion, a bad move just for the world stage, obviously, 100%. And a pretty scary escalation. So we're at the point now where we're just trying to maybe control the economic standpoint of this war. One thing's for sure that you just said, this is not over in the next couple of weeks. I talked about it with my dad last week. We talked about it a few weeks ago. I think when this all started, I was a little short-sighted, and as many people were, that we were just gonna cut off their nuclear capability if they had it and be done.
Right. And I think there's a telling sign here too. Like, not everybody's on the same page yet. I mean, for sure, U.S. and Iran, but even like, is Lebanon in the ceasefire? Is it not in the ceasefire? And when the two allies that started the war can't agree on that point, I feel like there's still some friction that needs to be overcome in trying to come up with any kind of off ramp to get to something that's peaceful. I think the blockade, we're going to see if it causes some additional economic damage to Iran at some point. They'll probably yield, but I think it's risky. But I think for starters, U.S. and Israel feel like they got to get on the same page. Yeah,
it's been interesting. We talked about this, but the impact that this is having on oil prices, and if you're an oil trader, my theory is, and this is hindsight's 2020, but if there were people that lost their ass in the first week of this trying to trade directionally, it's become very telegraphed. If you get this big move down in oil, the storyline has been you can bet that it's going to bounce back because we're going to escalate. There's going to be another bombing. There's going to be another attack. And okay, all of a sudden these escalations are reinvigorated. And then if we get some sort of peace talk, oil's going to come down. You can almost time this based off of a Truth Social tweet.
Truth Social certainly if 10 minutes ahead of time that the tweet's coming out. But I'd love to be in that. I think we talked about this on the last time I was on the podcast. It's really a volatility play right now. And these moves are big. Yes, again, if you know the tweet or if you can react the second you see it, you might be able to catch some of that wave. The markets are very fast. So it's hard to sit, read the article, absorb it, check your watch, go to your Charles Schwab account and try to trade it. That doesn't work. But if you do some volatility plays, because it's volatile and it's going to stay volatile, I think, for a while.
Yeah. And one thing I talked about last week when my dad was on, but was the WTI and Brent relationship. We talked so much about how we are a big producer of WTI oil and how maybe we would be more insulated from a shock. That was a common take. Well, we saw last week WTI trading above Brent, and this what my dad talked about is this oil inversion, almost like a yield curve inversion where you've got this opposite effect. And he did say it tends to reinvert quickly. And now we've got both trading below 100 again, Brent trading a couple bucks above WTI. So back to normal standpoint, but you could almost bet this is going back up to 115.
Yeah, I think it's going to, the $100 mark is the psychological point. I think it will cross back above. I think, WTI is interesting. I think one thing, WTI is available. So it's like when you have a supply shock, even though, I think a lot of people are questioning why are our gas prices going up when we're technically a net exporter of energy, maybe a net importer of crude, but the idea being we're okay. Why are our gas prices above $4 a gallon? Well, there's a global supply, and if you're a supplier and there's a supply shock that doesn't cut your supply off, you're still going to the price is still going to elevate because people are going to buy your oil. And so I think the WTI Brent inversion could just be a reflection of easy access, and then when things settle back down, if this certainly the strait opens back up, you'd see that put back around.
Yeah, I was in Trenton, New Jersey. And my buddy paid $4.40 for gas this weekend and was beside himself.
Yeah.
And we're seeing that come down. There's, I talked about this at the start. I think when you were on with me originally, but that there's a week to 10-day delay between oil prices and what comes through to the pump, just because gas distributors have their stock already in their inventory and they're getting it in every few days or so. So we'll see now that we're back up to 95 from where we were, back down to 95, how those prices reflect at the pump.
At the pump too. I haven't checked this, but it feels like it rises faster than it falls. So even if you have the same crude price spike and then crude price decline, gas prices elevate quickly and subside a little.
That seems like solid capitalism.
If you're a gas station, probably got a good excuse to keep the price high.
Yeah. So we've got, gas prices are up. Jet fuel obviously is up almost 100% this year. It's come down in the last week or so. Diesel's up. Yeah. And now something that you spoke about originally, where oil is not just about gas and heating oil. It flows through the groceries. It flows through the plastics and fertilizers. We're starting to see that extended effect of this war on those prices. And we'll talk about grocery prices that came out in last week's report when we talk about CPI in a minute. But groceries are certainly at risk now for these increased prices.
It's a link, right? Oil prices go up eventually, then fertilizer prices go up, and then you got to have fertilizer to grow the world's food supply. So eventually, food costs go up. It's this indirect effect. So if the stress lasts long enough, you can expect it to hit that third pillar.
So let's talk about the first signal that the stress is affecting prices. We had February CPI. It wasn't, this escalation started at the end of February. So when we got the Fed print in March, wasn't really
Right. Too
contributing
early.
to that number. March, we had CPI come in at 3.3%, which was hotter, the biggest jump in the last 3 years or 4 years, but not out of analyst expectations. The number I was more interested in was the core CPI number, coming in at 2.6%, which again, slightly up, but still below expectations.
Right.
That number excludes food and oil prices. And so
the things we care about the most, but
understood, but that showed that this inflationary trend has not filtered through to the rest of economy and goods and services yet. It's really, I mean, this is very short-term dependent right now based on what's going on in Iran. And again, we talk over and over and over again, and as this goes longer, that's going to filter through more. But for now, pretty much just has to do with oil.
Yeah, I mean, that's right. Like when you think about inflation, there's a lot of flavors to inflation. And, you like kind of the one everybody is really most concerned about is when you've got an economy that's heating up and you've got a ton of demand. So it's all that demand driven inflation. That's not what's happening right now. It's completely a supply shock. Now, historically, supply shocks are relatively quick. But, you never know. And we always like to think this time's going to be different. This is a case where we might not want it to be different. We might actually want it to be just a quick supply shock, but it's setting up to be a little bit of a haul here. And I don't know where that point is for like how long does this energy shock have to exist before things like transportation costs and freight costs really start to play into not only the food and energy. Again, it gets typically excluded when, say, the Fed's looking at an inflation number, but it matters to us because we still have to buy gas and food.
It's one of the biggest expenditures or the biggest expenditure for households.
So now it's really a matter of like how long does it take before it starts to hit those other and those other elements, like and when that happens, when we start to see any evidence of that, it's going to be difficult because now you think about like how would you even address that?
Right.
And it's not you're not trying to cool the economy in that scenario, so it's going to put the Fed in a very awkward position. And you're going to start hearing things like stagflation. And
so we've got the Fed meeting next week, Jerome Powell's last Fed meeting, as we've been leading up. I feel like for years, I think he is sticking around.
That would be awesome.
I think he is sticking around.
He needs to stick around.
For sure.
I know it's not traditional, but who cares? Nothing about what we're going through right now is traditional, so hopefully he sticks around.
Agreed with that. And so we've got a Fed meeting next week on the 26th, I believe. And like you said, the nightmare scenario or the difficult scenario for the Fed is if you've got high inflation and low growth, and that's stagflation situation. So far, labor numbers and corporate earnings and consumer expenditures have really stalled any thoughts of that because we are still growing as an economy and we're kicking off earnings seasons right now, and we'll see what that looks like. I know you're, speaking of national champion, the University of Michigan consumer sentiment survey came out last week. Another basically all-time low in terms of how people are feeling about the economy. But as I've talked about, as everybody kind of that's been weathered in this industry has talked about, that's really a good sign, at least for stocks.
I'm definitely a contrarian when it comes to consumer sentiment, generally speaking. But what you don't know is where the bottom is. And so it's like a low can go lower, it can go lower, it can go lower. And so does that mean just because we're at historic lows, we're at or near a turning point? Not at all. We could be weathering this stuff for quite a while. So it's kind of that phase where it's like, I think the consumer is right to feel a little bit on edge right now. So that you're seeing that reflected in the confidence numbers. It's when they really capitulate, that's when I would become contrarian. Right now, I'm kind of still on their side.
Okay. We alluded to in the open when we were reviewing our last fades or trades, the Fed meeting next week and what they're likely to do. Right now, analysts pricing in just a 2% chance of a hike, almost no chance of anything happening. And that is because of that conflicting data. I mean, but that's actually a good thing, I think, for the Fed is that they can remain patient. They don't have to make any decisions because it tends to be, at least the last couple of years, that when they make a decision, it's been the wrong one, or at least, the open bond markets haven't seen it as the right one. So they will more than likely and next week do nothing again and continue to see how this plays out.
The Fed, it's like they have a difficult job, obviously. I mean, I think when you look at the labor market, nothing really compelling for them there yet. Again, I do think there's some weakness creeping in, some softness into the labor market. We're obviously not losing jobs yet, but things are flattening out. Unemployment's kind of where I think a lot of economists and analysts would expect it to be for an economy that's at or near full employment. So nothing really there. I think they're probably a little more focused on inflation, and again, that's got to shift to more either more demand driven or broader for them to take any action. Raising rates right now probably doesn't do anything for that. Lowering rates, they could probably lower rates, frankly, and not have necessarily a big impact either way. But I think they sit still. Why not? You got to build an excuse. They're historically late because they have this tough job that, and it's easy. Like, you want to know what you want to do what you should have done,
right?
And you don't know you should have done it until it's already. So it's like, you got to deal with that.
There's
going to be a delay.
They're reactive, they're data dependent. I mean, what they're, they do obviously have forecasting, but a lot of the times they're taking in the last month or 2 months or 3 months and the trends of that data. Right. So yeah, more than likely they will sit safely, which coincidentally is what I always tell people. People like to say fly safely when you fly. You're not doing anything. Right. So I say sit safely. I've gotten my dad on board with that, my whole family, which you and I are both very frequent flyers, but we have that in common. We've got one crucial difference. I am a diehard United loyalist. You are a diehard American loyalist. I am a normal person, so I will fly American if I have to. I don't think you will fly United if you have to.
I mean,
what was the one experience you had that you always send me a picture of?
So I did fly United once. You were actually supposed to be with me on that flight. That was the only reason I booked it, is because I wanted to complain in your ear the entire flight. Then I
don't think you could have done that from first class when I'm in like 36D or something.
I would have walked back a couple times during the flight, but obviously you ended up not being able to make that trip. So I had to experience United on my own. Of course, I went to the United Club. Espresso machine was broken.
Can't believe that.
It's like, so that's pretty much sets my flavor right now.
I can't believe that.
I will say those two flights were on time. And I actually changed my flight coming back. It was relatively painless to make that flight change.
Wow.
But yeah, I'm an American loyalist. So.
And there's talks the last couple of days that have sparked from the White House and from United CEO about a potential merger between United and American. I hear that and I immediately think antitrust lawsuit.
100%.
There's no chance that
goes through. That's what I would say. Not a chance.
Right now, American is the largest airline in the country. They have about 22% of travelers every year. United is close behind at 18%. So you're talking 40% of the domestic airline market I think merging into one.
Yeah,
there's no way.
It depends if how you measure it. But even if you just want a market share alone, if you look at United, American, Delta, and Southwest, they're all around 17-ish% market share. I think maybe American's just over 17 and United's maybe just under 17. But you add those two together and you're looking at 35%. This seems hard that this gets through any kind of antitrust.
So I saw this.
I will say, who's going to approve that? The DOJ is going to be the first one to look at that, probably with some help from the Department of Transportation. And I got to tell you, my confidence in the DOJ right now is not real high. So, and by that, I mean doing what's right versus doing what maybe they're getting influenced to do. So to be curious, I think it goes nowhere, but we'll see.
We will definitely see. I mean, the airline industry obviously was rocked by COVID. We're now 5 years out of that, but airlines, at least from a stock perspective, took a little longer to bounce back than most other industries. I mean, you said purposely American's a little over 17, United's a little under 17. That was obviously framed for that reason. So I will just say American Airlines stock, AAL, down 50% still since COVID.
Right.
And so this has been, obviously we've got the increased jet fuel prices, but that's really a short term, as you said, supply shock.
And they can hedge that out pretty quickly. So I think that'll be it'll mean higher ticket prices, but like for us, so that'll hurt, but it won't necessarily, it shouldn't be damaging to the business model.
And then there's also the last year we had a bill passed that airlines are now, they cannot offer you travel credit. They have to offer you a refund if your flight is canceled or your flight is delayed over 6 hours or whatever it is. I think that's put more financial burden on the airlines to not just be able to say, oh, so sorry, here's a $15 meal voucher.
Right.
So, it's interesting that they're even talking about this.
I know.
And I don't know, what United has to gain for it. I have an interesting quote here. I'm not sure if you saw this, but Captain Dennis Tazier, the spokesman for the Allied Pilots Association, which is the union that represents over 16,000 American Airlines pilots, if you didn't know that.
No.
He was quoted saying, "We've been very open about our concerns regarding American Airlines' financial, operational, and customer service underperformance under the current management team." I mean, that is just how I feel about this airline. I think if you fly American, you're asking to get canceled. You don't get any snacks on the plane. It's a bad experience.
Hang on.
I don't always fly business like you do.
Right.
But
hang on. So, okay, we're gonna take a slight, divergence here. Talk about first class versus first class. American wins all day long.
Yes, agreed.
Right. Now, behind, timing, are you like, are your flights getting canceled? I haven't seen the statistics, but
Yes, you did.
I mean,
We've talked about these in February.
I haven't memorized the statistics. I must have intentionally blanked those out. But yeah, I mean, again, maybe I should spend some time flying United so I would have an informed opinion.
Right.
And, quite frankly, United flies. I do a lot of like regional travel, not a ton of like long distance hauls. And United flies to a lot of my destinations. So maybe
I mean, that is the bread and butter of why I'm a United loyalist. It's just the Chicago hub and then a lot of the locations I fly to. Otherwise, I'd love to be Delta, but they don't have anything in the Midwest.
Same. I mean, these loyalty programs work, by the way, because one of the reasons I'm a big slave to American is because I've been an American Advantage member for most of my adult life. And so the establishment is there. Now I know some of the airlines, let you do a one-time transfer, but it's risky.
Yeah.
So I haven't done it.
Yeah, me neither. And so we'll see what those earnings look like. I mean, I'd expect the further we get from COVID, the better those numbers are going to look. You've got people traveling. You go to an airport. I was at the airport for like spring break week, and it was my McDonald's took 50 minutes. It was the morning after a wedding, so I needed something greasy. But it's jam packed there.
Champagne, too much champagne.
Champagne, yeah, way too much. It's hopping there, and so we've got the start of earnings season kicking off this week with big banks. We saw Goldman Sachs yesterday, Wells Fargo yesterday. Interesting numbers coming from them. Goldman beat on the top line and bottom line, had a record equity quarter for trades, good solid investment banking quarter as well. But the number that I saw that would point to the downside was the increased credit provisions that they're accounting for, and up 10% year over year. Wells Fargo yesterday was up 21% year over year. That kind of goes hand in hand with the theme of this credit shock and the credit scare that we've been talking about lately with just retail investors and private credit. But what do bank stocks usually tell us about the market for earnings season, at least?
I don't know that they tell us anything.
Okay.
I mean, I think they tell us how banks are doing. But I don't know that they're necessarily a good precursor for just the earnings season in general. I've not studied this in detail, but that'd be my thought. There's no reason Goldman coming out with good earnings or Wells coming out with good earnings would necessarily translate to tech coming out with good earnings.
Yeah, I would think it would relate to the economic standpoint and the consumer a little bit.
Yeah, sure, but maybe I don't know. I think you talk about the credit provisions. Is that a bad sign? Is that a good sign? That's something to watch. I mean, obviously, I don't know. Private credit has historically been kind of isolated from the consumer. I know that there's certainly vehicles. It's easier for them to act that, which, by the way, that tends to be a bad sign.
Yeah.
When you have a market sector that's segregated from the consumer, from the general consumer, and then suddenly there's these interesting vehicles and they get easier access to this asset class. That historically doesn't end well. But I don't know if there's a huge amount of broad consumer exposure to private credit. Private credit, I think, is still going to be more on the private side.
Then what do you make of the provisions?
I think it's just good planning at this point. You don't know, you can read, you can find, certainly we've seen some banking crises, right? Some private credit even just last, was it a year ago?
23.
23? Wow, 23
years.
years. Holy cow. It feels like it was just yesterday.
It does.
Oh, that's in the rearview mirror then. We don't care about that anymore. So I think some of this is just kind of prepping. Yeah. And there will be some private credit stories and losses. Will it be systemic? I don't expect it to be anything like the housing crisis we saw in 2008. I mean, that was where you had everybody and their brother and sister and cousin and dog, actually, in some cases, had easy access to that space, and it blew up. Yeah. I don't see private credit going that direction.
Okay. So the expectations for earnings season, strong again. I mean, analysts expecting 13.2% year-over-year growth, coming off of last quarter's 13.5% year-over-year growth expectation that exceeded. We've had 6 straight double-digit growth quarters in the past 4 quarters, so the past calendar year. According to FactSet, 80% of companies reporting surprise to the upside. So a ton of strength in corporate earnings across the board. This isn't just tech heavy. It's not just Mag 7 heavy or semiconductors, but what do you make? I mean, you seem a little nervous about.
Were you
going to say the B word?
The B word?
The bubble word?
No, but I don't.
Not because of this.
I wasn't, but now I got it in my head. But no. So I think when you think about that double-digit growth, and 13 is probably one of the higher estimates that I've actually not seen 13. I've seen somewhere between 10 and 12. But what I think is
not
key
very
is
well-known company.
The growth expectations are broad, but not every company is expected to grow 10 or 12%. What you see is that the top 5 or 6 companies, they're going to be that tech. You talk about is this going to be tech driven? I can tell you if it's not tech driven, it's not going to be 10 or 12% growth. It's going to be 4 or 5 or 6% growth. When you peel away those top 5 names, I think you're going to see a growth expectation that's more like 4 to 6%. That's solid. It's not bad. Like they're not like so even when you peel away the drivers, you still see some solid economic strength in those companies. But that headline number, that 10 to 12%, is still being driven by the 20 to 30% growth expectations of those top 5.
Yeah. So interestingly enough, we talked about this last quarter on the show, and just Scott and I peeled away the Mag 7 from earnings to say basically what would be the over under on earnings growth for the rest of the 493 or the 492.
Did you do that exercise here?
I did not do it here.
Okay, I'd be curious.
So last quarter though, we had close to 10% growth across the rest of the 493. So the Mag 7 was I think 19 or 18%. And the rest of the S&P obviously lower, it's cap weighted, but held its own pretty well. We're still seeing double-digit growth across the board in specific sectors. It'll be interesting to see because you'll probably have oil and gas companies this quarter with some pretty exceptional earnings reports that'll pick up some slack.
Yeah, maybe.
So we'll see. I think the key thing though for me is always guidance and not the actual headline numbers. And in the last year and a half, all we've heard, the keyword of all earnings reports from CEOs and CFOs, tariffs.
Yeah.
I think this one, it'll be Iran, war, uncertainty, Middle East, oil, whatever keyword you want to pin on. But
I mean, we've kind of forgotten about tariffs.
Yes,
but,
we have.
But we shouldn't.
Unless you buy into Trump's master plan.
I mean, even before them, so I actually bought as we highlighted, I think on the last podcast, I like to make wine. And I recently bought a piece of equipment for the vineyard, for the winery. They explicitly line item, like $200 charge for tariffs.
Was this the Croatian oak barrel?
No,
close,
it's
right?
Hungarian. Is preferred, but this was a piece of lab equipment.
Got it.
But the idea being that there's the tariffs are still out there and they're still being line itemed, and it's still contributing to that inflation number, or will it's hard to assess what the impact is now, but you definitely see companies starting to open up and pass that cost on. But we forgot about it. Like they were struck down. There was a lot of talk about refunds, and that seems like it's gone nowhere, or it's certainly gone.
That's what the war is for.
Okay. It's certainly gone quiet. And then, we have, obviously, he still has that threat tool in his bag with the short-term tariffs that he can put in place. So it's kind of funny, like how we've forgotten, and I think they're still there. And if we can get back on it and fix it, then that probably helps.
Yeah.
Even if it's not a headline.
Yeah, and I think it's just something to keep an eye on for the next few weeks. Tariffs are still, I agree with you, tariffs are still there, whether they're under the surface or on the surface, and whether you believe this war is in regards to tariffs and negotiations or not, still a big factor for these companies. And I'd be remiss if I didn't add, today's the first day since we started drawing down on the markets in late February. All 3 indices are up for the year. So
recovered the last 7-10 days.
To that point, something we talk about, my dad talked about as even a trader in not day to day, but in the long term, but as investors, as traders, if you just don't listen to the noise, right? If you're not using this money or drawing from this money today,
right,
and you're just investing for the long term, if you just checked your account on January 1st and you checked your account today, you'd be even.
The number one proven, this is a fact. I mean, this is 100% fact. Best way to lower the volatility in your account is to look at it less often. 100%. And if
is that tongue in cheek or
that's
real?
Not tongue in cheek. That's real. And you'll see that because if you're looking at it every day, you're seeing you see that daily fluctuation. If you wait, check it once or twice a year. Obviously in our profession we can't do that. We got to look at it a little more often. But that's the number one way to reduce your volatility. And I think we talked about this in the last podcast. Like sit tight. Because if you don't have a plan, you get burned in scenarios like this. And it's very hard for investors to have a plan to deal with stress like this. Better thing, go play golf, go to the Masters actually, or whatever you want to do. But just don't look at your account for a while.
Yeah, I mean, this is the same discussion that we have with our financial advisors too. It's like when you're making portfolio moves, don't base it off of a war in Iran. Don't base it off of a short-term constraint or escalation that's going on, right? It's about having the long-term plan. It's about seeing the long-term investment cycle, and it gets difficult. There's a lot of noise. There's so much noise.
There is.
But you have to be able to tune it out if you want to successfully invest.
And, sometimes advisors can't help themselves. Sometimes clients want to see it. So, like, even in that scenario, you can do it. Just make sure it's in a small proportion where it doesn't have a devastating impact if you get it wrong.
Right.
So, another way of saying stay diversified and play in a corner, but so it works.
Yeah.
So why wouldn't you do it?
I mean, it's proven. It's got 100 years or so of proven. One thing I wanted to get to that's a little off topic from our agenda, but is Bitcoin action. So I don't know if you've been following Bitcoin price over the last
it goes up and down
2 months. It goes up and down a lot. But I kind of look at Bitcoin. I kind of think of it as the currency of chaos. And surprisingly, though, Bitcoin's even over the last month. It's up to 75,000. It had dropped to about 60. So you've got a nice 25% recovery since the bottom there. But you would think with this, like when we saw Russia and Ukraine in 22, Bitcoin was going crazy because Bitcoin was all of a sudden going to be the world currency and the reserve currency. And every oligarch in Russia had to,
no more petrodollars,
liquidate and go to Bitcoin.
Yeah,
so
Bitcoin,
I've been surprised that it hasn't spiked harder than it has.
I mean, look, as a fiat currency, I mean, I feel like we're still struggling to identify the use of crypto in general, but certainly Bitcoin. And so I just don't see it like yet. And I think when we do find out, it's probably not going to be Bitcoin. It's probably going to be some nuanced improvement of blockchain and to a different vehicle that assuages a lot of people's concerns about it. So it's not. I think the volatility you see now is going to be the players that are already in the market and they're playing their whims that they would play in any other stressful market environment.
XRP or Ripple gets all the hype as what would be the leading candidate for a currency for reasons I can't explain. I just know that.
Yeah.
But you mentioned going to the Masters.
Yeah.
You catch a lot of it this weekend? Any of it?
I caught a fair amount of it. Yeah.
It was.
We're moving into the sports section.
We're moving into the sports section.
Hold on, I gotta pay.
I gotta give you your flowers.
Gotta pay tribute to the Masters.
There we go.
To basketball. Masters. Yeah, baby. All right. I won't put the shirt on.
You get to a Michigan playoff game?
So I actually, so if you look at this hat, actually, I don't know if you can see, it's a 2024. That's a football hat. I spent all my money.
That was before they had the real tournament, though, right?
Well, hold on. No, let's not go there. Okay. But I spent all my money on tickets to the championship game. I went there with my brother, had an awesome time. It was great. But I didn't have enough money to buy a new hat. Okay. So I had to go with this hat.
Yeah.
But still says the same thing. Champions, baby.
Champions.
Yeah, it was great. It was awesome. I mean, to talk about the game for a second, statistically, probably the worst basketball I've seen Michigan play all season.
Yeah, I mean, close to it.
But that's their way. Like, they find a way to win every game. And you look at it, I mean, what were they? They were 2 for $1 million in threes. I mean, it wasn't until the second half. Cadeau hits the banger and barely went in, and then McKinney is solid always. But you could have built a stadium with the bricks that they were throwing up. But and UConn controlled the game. They got in foul trouble. UConn did, and that Michigan ended up with like 12 or 14 more free throws, and made a good portion of them. And when you win a game by 6, that's the difference. And it was a blast to be there, though. Great energy, awesome. I loved it.
I mean, at one point, and I'm going to take credit for this. In January, I said I thought the key to Michigan winning the national championship was they had big guys that could shoot free throws. At one point, they had made 17 straight free throws. Yeah. That does not happen in college. I mean, that barely happens. Yeah, that's Steph Curry numbers right there.
It was
they were, and then on the defensive side, Ade Mara and Mo Johnson were. I mean, I felt like they had 12 blocks. I looked the next day, it was 6. I thought they had like 12, 15 blocks.
Like, you get these, because UConn is not, they want to slow the game down, right? But every time they get a couple breakaways, you think it's a wide open, and then it gets blocked and it goes down. The other one gets blocked, and then like this chaos ensues for.
There were guys on the ground the whole time. I mean, diving around.
I mean, Cadeau, looking at like Cadeau.
He's back?
I was like, always a little bit skeptical of him early in the season. I liked him, but I was glad that they picked him up from where's North Carolina.
UNC.
But he just seemed like he could get at times careless with the ball.
Yeah.
But have him come back and be the point leader and it was maybe only 5 or 6 assists, but still the guy, like he was a game changer. It was just fun.
Yeah.
Just fun.
He's back for his senior year. They just signed him already.
All right. Awesome. I didn't hear that.
Yeah.
That's cool.
On to the Masters.
Yeah. Right.
Ended up being a pretty entertaining final round. Rory had the biggest 36-hole lead of all time at the Masters.
And thankfully
6 strokes, blew it on Friday, on Saturday.
Right.
You had
give us a little
Cam Young catch up, Justin Rose caught up, Scotty was lurking as always.
Right.
And then Sunday, Rory was 3 back within 3 holes.
Yeah.
And it was like, oh,
I think
back.
for me, what I think one of the defining moments of the tournament was actually when Justin Rose missed his eagle putt on 13 and then ended up 3-putting for par.
Yep.
Like, because he puts that in, he's back by 1, pressure's on. Like, I think that miss kind of almost deflated the rest of the field. It seems like, even though they didn't know about it, it seemed like that miss, and then Rory guts out a couple of great shots, great putts, and ends up with a 2-stroke lead.
That defined the last round of the tournament. I mean, Rory was 12 under through Friday, ended 12 under to win it. But on Sunday, like you just said, Rose was burning edges. Cam Young couldn't make a putt to save his life. The only guys that were making putts were the guys 6-7 strokes back, like Tyrrell Hatton, Colin Morikawa, Scotty. And ultimately, it comes down to Scotty on 17 misses a birdie putt by literally an inch and a half. And then he ends at 11, Rory ends at 12. I mean, that would have been like the most epic ending ever. If you get world number 1, world number 2, winners of the last 4 of the last 5 Masters now, so 3 of the last 4 at the time, going at it in a playoff, that would have been epic.
Yeah. It was still great finish. I mean, they're always more fun to watch when they're exciting like that. Unless you got, a bet on the winner, then you want maybe some margin. But
yeah, it was a great tournament. Golf's in a great spot. I love talking about golf.
I feel like on Rory, I was happy Rory won. I mean, obviously puts him in elite company now as one of 4 guys, 4 guys that
go back to back.
And like a lot of people, it's weird because you feel like a lot of people don't like him, but then at the events, everybody's cheering for him. Everybody in the locker room likes him. I mean, he seems. I think. I like him. Actually. I liked when he was anti-live. I mean, he might have been a little bit aggressive with that stance, but I liked it. I feel like I'm a traditionalist. I like to see you pay homage to the way the game was played. The meritocracy of it. Versus just getting a big paycheck to go play. So I was behind him on that, and I know he's can be polarizing, but I'm a fan.
I never understood the hate. I mean, I personally, I felt the same way about the live thing. I was like, whatever, dude. I mean, you guys already have generational wealth. Who am I to knock somebody for going to take $400 million to go work less? But I love that he stood his ground. I love that he was the face of the opposition there. And then you could just see, like, over the course of the 3 years since then, him sort of chill out a little bit. Probably because he got that big payday from the framework of the merger from Livin' and the PGA. But he's a great face, a great ambassador for golf. Like, it's great to have him playing well again. But I felt like there were so many guys. There's so many good players right now. What did you make of? Did you see the story that he had done like 10 practice rounds leading up in the 2 weeks leading up? So he would drop his daughter Poppy off at school, take his private jet from Jupiter, Florida to Augusta, play golf, and then come back for dinner. And he said that on Friday, and I was like, that people hated that.
I mean,
win the Masters,
it's a carbon footprint question.
That's the argument you could make. But win the Masters, and you have the same advantage, Like, it's not unfair.
Yeah, no, I mean it's a hell of a travel schedule.
Oh,
I don't know what the flight time is from Ireland to.
Look, he lives in Jupiter, Florida.
Oh, well, he should be in Ireland.
Probably 50
Everybody
minutes.
in Ireland loves him too.
Yeah. Well, they kept showing that shot of his home golf course.
Yeah.
And these like 18-year-olds drinking Guinness. It looked awesome.
Yeah.
Yeah. So
Jupiter, Florida is a little closer.
A little closer. Yeah, probably 50 minutes an hour.
Probably manageable.
Yeah. So Rory goes back to back at the Masters. We'll be back to back with another episode next week. That's it for today. Thanks for joining me.
All right.